Cool. Thank you, Spencer. Recently, I mean, this was just a couple of weeks ago, a person, a very senior JP Morgan person called me up, and all in a panic about, of course, social media. That there are now campaigns on Facebook and Twitter against banks. Who knew? So anyway, a big kerfluffle on this guy. And the more interesting thing to me was I suddenly thought, oh my God! But of course, banks are the logical next Mubarak. And what's more, they will not only likely fall for that reason, but they'll also likely fall because who needs banks? This is I can barely think of an industry more ripe to be disintermediated, and that brings me obviously to you guys. And if you don't know, Wonga, and I will try to do the explanation here. Wonga, you can borrow up to £1,000 for a maximum of 31 days, and the Wonga algorithm will qualify you effectively within minutes, and that's the deal. As simple as you can possibly make lending money. Now, which seems, I would say, completely revolutionary and suggests a business that has no growth limitations. You are exactly at at the sweet spot if you become the good guy rather than the bad guy. So, as you think about yourselves, how do you become the new thing rather than the old banking thing, which is going to go away?
It's a great question, Michael. So, what we do at Wonga fundamentally is help people solve their very short-term cash flow problems. And we do that using the internet and using mobile to allow us to get that decision made in milliseconds in a completely automated way 24 hours a day, and then dispense cash to people within 15 minutes 24 hours a day. And so that's the core of the proposition, is helping people with a way that's never been done before to get cash quickly when they need it, wherever they are. And so the way we think about how we do it and the responsibility involved in it is quite significant. I spent most of the first year before we started the business thinking about just this question. Could you solve this problem? It was clear to me there was a massive problem. Could we solve it technically? And we can talk about how we did that in a second. And then is there a way to solve it responsibly, ethically, in a way that genuinely is the right way to do it? And I think that's important in finance because there are unintended consequences and externalities that occur obviously in finance that are very significant if one gets it wrong. And so we thought about it in a way that I think in many startups one wouldn't necessarily think about social impact before you even start. And so for us it comes down to three core points really of what I thought and we still think are the key reasons that differentiate us and that create a set of values around which we define all of our products. And so the first one for us is transparency. So if people look at wonga.com or download our iPhone app or Android app or BlackBerry app, you'll see that it is completely transparent. So for me what that means is at the point of sale, does the customer really know exactly what they're getting? Genuinely, is there anything hidden? Is there anything just suggested, or does the customer exactly know what they're getting? And we've built everything we've ever done so that customers know in advance as they're doing the transaction exactly what it's costing, how long they're getting the cash for, what the total costs are, and they've got that right in front of them. So that's the first. And the second thing is we wanted to hand control to the consumer, and that has lots of strains of commonality with lots of the great internet businesses, where instead of the control being, I can only have a mortgage that's a 10-year, 20-year, 30-year, or whatever it is. Literally on Wonga, you can take £1 for a day, £17 for 9 days, and you configure your product more or less as revolutionary as what Dell did, back when you could configure your own laptop. Is you literally get to choose exactly how much you want and for how long, and that drives the price, and you can see it in real time on our sliders. So that control is a really important part of how we're different.
So essentially that you can say that Wonga is Amazon for money.
Exactly.
So you go, you buy money, this is the cost of buying it for this period of time. And essentially like Amazon, and correct me if I'm wrong, this is founded on a set of algorithms. I mean, to the extent that Amazon's a recommendation business, is an algorithm business. Your approval process is algorithmically based. This is
correct. So the third part of it, just to segue into it, so the first is transparency, then it's about giving control. The third thing is that there's a layer of selectivity here, where we don't approve every application, unlike an e-commerce provider. And so we look at, is this appropriate for Michael right now to get the cash? Will he be able to pay back? Is this appropriate where he's given? And we accept only about 1/3 of applications. So we reject fully 2/3 because our algorithms we don't feel, based on our algorithms, that the person is in the right space to do it. Okay. And so there's a level of responsibility.
At this point in time, obviously the world is on the and has been on the brink of collapse because of banks have made bad loans. How does your algorithm, what you've developed, how does technology, can your algorithm bring stability to world lending markets?
So I have the belief that lending decisions are part of a category of decisions that are better made by machines and are better made objectively. So we use about 8,000 pieces of data that we gather on every applicant every time they come to Wonga, and we crunch using artificial intelligence and machine. We crunch the data in quite sophisticated ways and make a decision. Nobody can phone me afterwards or anyone else at Wonga and explain why we didn't understand, and actually it is just objective. And I think there's a massive plus. And I think a lot of the reasons people made loans to some of these countries and to borrowers who weren't in a position to pay was because of reasons that in retrospect they realized they wouldn't have made. And I think people are, we all are, I mean, we run businesses, right? We run different kinds of organizations. We make hiring decisions all day long. And we all know the frailties, how much subjectivity creeps into it, whether you like somebody in the first few seconds influences how the rest of the interview goes. And that's the same process that a bank manager goes through when they're making a decision. What are you wearing? How do you look? What accent, how are you feeling that day, et cetera, et cetera. I believe that if we reduced it to the facts and let data drive it, we'd make much more rational decisions over time.
Now, the transparency issue, let's deal with that, and then at the same time with the nature of how you qualify. What are you willing to tell me about actually the nature of this algorithm?
Not a lot. Other than to say, that the data exists, and I would encourage people in different, I think that what's interesting here is that the data we're using isn't mysterious data. There aren't dark pools of data anywhere that we use. It's about data that is out there, that is accessible, it's usable.
So this is beyond finance. This is public data.
Exactly. It's credit bureau data. It's people's web. It's data about trying to get a good sense of who the person is, and we keep adding data sources because the data is massively revealing. The one thing I would say that's interesting is we've never found a silver bullet. People often go, what is the one thing that predicts? That we've never found. We collect like 8,000 pieces of data because there isn't any one thing. People are complex.
How often does it change?
So they're different. We redo manual parts of it on a monthly basis, which is radical in finance. I mean, banks change scorecards and things like that annually. I mean, 6 monthly is quite radical. So we do it monthly, but the machine, there's artificial intelligence built into it. So on every single loan, it's getting better, literally, at making the decision for the next loan. And we've done now over 3 million loans at Wonga in the last couple of years. So we do more lending by volume than any bank does in the UK. So there's a lot of volume in the system, and that system's getting smarter and smarter.
So as much as you're in the finance business, you're in the data business.
Very much so.
Or are you more in the data business? And is the future of your business more about data than it is about finance?
No, it's insightful. So I think it's a data and technology business, because the technology platform that lets us make those allocations of capital and those decisions on an ongoing basis is the core of it, using data. And at the core, Wonga is more of a technology data play than it is. The business model means that we provide people with cash advances, but really what separates it is that platform.
So I borrow £1,000 from you for 31 days. How much does that cost me?
So we charge 1% a day and a £5.50 transmission fee. So the average loan really is about £200, and the average term is about 14 days. So one would pay about £33 for that. And to put that in context, right? If the alternative is, say, Lloyds Bank, which is the biggest bank in for current account for consumers in the UK, so you're going over your overdraft limit, which is when you'd use Wonga, you'd be paying them about £10 a day, plus a fee of £2.30 for debit card transactions, etc., etc. So for that 14 days, you'd pay about £140 in fees, compared to £30. So we're a fraction of the cost of going over an overdraft limit. This is about a short-term solution for a short-term problem. And so it's about avoiding long-term credit card debt. It's about avoiding bank overdraft fees. And for US people in the audience, US not sufficient fund fees for going over overdraft limits in the US, about $38 billion a year that banks charge in that space. So there's a ton of cash. Retail banks don't work economically without charging significantly higher fees than Wonga to go over overdraft limits, and that's where Wonga comes in. This isn't about paying Wonga where you would have the cash in the bank. That's not what people use Wonga for.
Your model now is this 30 or 31 day short-term model. Would you, and actually why wouldn't you extend that? Why wouldn't you take this model into business lending? Why wouldn't you take it into longer credit card type lending, or at least on a 3-month basis, or instead of a 1-month basis? How do you expand this model?
So the platform and the model is pretty extensible, and I think over time we will see us extending the product footprint. We're dealing in a world though where our competitors, who are the banks, have got massive built-in advantages by being banks. So these, I think as we've all become aware in the last few years, there are these implicit government guarantees that reduce their cost of capital significantly. So we're competing in a world with big players with massive built-in advantages. And so for us, it's been really important to make sure that we are playing in a playing field where we can compete on speed and on convenience and help customers and stay focused on that customer need.
So one of your future issues is cost of capital.
Yeah, absolutely. So as you get into the longer term, cost of capital becomes a very significant constraint.
Okay, you're in the UK now. You're going into, you have other markets which you're looking at.
Yeah, we're actively looking at the moment at where we extend Wonga into geographically as well as product based. And we're spending a ton of time in the business and resource on scaling. The business is growing fast, and so meeting that customer demand and not disappointing people is a major line of thinking and how we do that.
But the US is in your sights. I remember I think on this platform. On this stage 2 years ago, that was the question directed at Spotify. When the U.S., why not the U.S.? And as I recall, the answer was then imminently, but it took 2 years. When do you come to the U.S.?
I'd be very surprised if we don't come to the US. I want to bring the solution to US consumers and give people another choice. And the US super complex from a regulatory perspective, and there's states are regulated differently to federal, etc., etc. But we're looking at it and we're thinking about it, and we'll get there.
Great.